Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us at the Market Site studio, we have Joe Cavatoni. He's the Chief Market Strategist of North America at the World Gold Council. We're going to take a look at the banking sector impact on gold and some potential headwinds that the asset class could see in the near term. Joe, it's great to see you as always. Welcome back to TradeTalks. Even though we're talking about some headwinds here, gold is teetering around all-time highs. What's driving the price rally, and do you think there are factors that could push it higher?
Yes, I think that's a great question, and let me start by saying, look, we still have a backdrop that's really complicated. You've got monetary policy, what the Fed's doing, you've got the banking crisis, as you've mentioned, ongoing geopolitical risks, and embedded in all of that, you still have us coming out of a world of COVID and ongoing risk factors of that nature. So what we see with the banking sector, and more importantly with the rate rising environment, is those two factors are playing against each other. The rate environment and how the Fed's handling inflation and trying to get itself to a soft or a hard landing is actually creating that headwind. And what we saw this week at Wednesday was a rate rise of 25 basis points, the potential for the Fed to slow down. And that's what's starting to put pressure against the gold market, but ultimately is loosening up as they look to be slowing down in their rate rising environment. Now, juxtaposed to that is you have a banking crisis. And actually, I call it a crisis. We can call it whatever we'd like. But you've got small, medium-sized banks that are having significant problems. We just had another fail, a forced merger this week with JP Morgan and First Republic. And ultimately, what you're dealing with there is a credit concern, which is creating the fear. So those two factors together are pushing gold higher. So a bit of a tapering off of the expectation that rates are going to continue to rise, and this banking crisis.
How are investors responding to the higher price? What trends are you seeing there?
It's interesting to note. Now, our gold demand reports is out tomorrow on Friday, May 5th, and I'd encourage everybody to take a look at that. But we've been seeing continual trends throughout the course of the first quarter. We've been seeing buying at the retail level, and that's probably driven mainly by the fear factor that's going along with, should my money be in a bank? Where's the safest haven for me to be right now? And how should I basically protect myself? So I would pay attention to what you see in barcoin demand, flows that go into IRAs in that form. Those are numbers that'll actually give us an indication of that fear trade that's going on. And that's something we've been seeing over the course of the year. And last year we saw that as well, in particular in the US market. But then when it comes to the institutional set and the ETF markets, for example, we're still seeing them probably weighing that risk of rates a little bit more high than that risk of the fear. And that means that what we're seeing in the ETF market has been slow growth, but starting to pick up in terms of the flows into ETFs. So the price has been performing exceptionally well. We're up 12.5%, but the flows have been muted throughout the course of the first part of 2023. And we expect that because it's signaling that we'll see that flow coming online more along the lines of midsummer.
If we continue to get fallouts from the banks, we know how it could impact the economy, how it could impact the broader market. How could it impact gold?
It's going to continue to play on that fear. Remember, gold has, people have feelings about how to invest right now, and their concerns around the environment for the economy, and then their concerns around where their money is actually being held. That's safety, and ultimately preserving your capital. That's at the bedrock of both of those decisions. Like, how do you preserve your capital? How do you dampen the blow against a portfolio? And gold's role in the diversification benefits you get from it and the returns that come with it are what people are thinking about. So if you continue to see crises with banking, you're going to continue to see retail money particularly, and that smaller denomination moving out of bank deposits and moving into things like gold.
Are there potential headwinds in the near term?
Yes, let's see what happens with the rate environment. Now, we've got signals that maybe there's going to be a pause next time around, but let's see what plays out. That's the biggest headwind right now. But behind all of this, again, are other areas of the market where we continue to get expectations of growth in the demand. You see central bank buying that's been record-setting in 2022. We expect to see some interesting numbers in first quarter on that. But you also have, we've talked about this before as well. China was under lockdown on COVID. Now it's come out of that lockdown, and now we're looking at what that could mean to the gold demand. So you can see these other pockets of demand continuing to put upward pressure on the gold price and actually take us into what we are teetering near record levels.
So it sounds as if the trade is flight to quality investments at this point.
Fear right now, fear always plays into the decision on gold, but don't underestimate the value of gold diversification when it comes to the longer perspective and the longer trajectory.
All right, Joe, appreciate the insight as always. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.